So let's tell you the trade setup for our markets today, the big budget day. Nigel, what are the levels looking like?
Well, let's focus on first the FI positioning, right? They unwound some long positions in yesterday's trading session. If you look at it, close to 12,000 contracts is what they unwound in trade yesterday. They added some mild short positions as well. That doesn't take away from the fact that they continue to remain net long with 77% of their positions on the long side. And just take a look at this chart. You know, the FIs, yes, they're net long, but in the last two sessions, they've skimmed down their long positions by close to 50,000 contracts because they had moved closer to around 3.9 lakh contracts odd. And after the bit of unwinding that we've seen in some short edition, it's come down to around 3.4 lakh contracts odd. And the clients on the flip side, well, they have been the ones that have been net short. They, in fact, have covered some of their short positions. So in the last few days, from their short positions being around 2.5 lakh contracts, it's come down to a little sub that 2 lakh contracts odd. So, Mangalam, that's about how they're positioned this time around. But what does history suggest with regard to the FI long exposure? And how does the market react as well?
It's extremely interesting. You know, if you just take a look at the last few budgets, the FI is actually, like you pointed out, 77%. That's the most bullish that they've been on India on budget day itself in terms of their long exposure. So if you just look at, you know, the way the FI positioning has been in the last few budgets, you have right now the US market's doing extremely well, but here you have it. Feb 2020, the FI long exposure going to budget was just 15%. The Nifty actually fell by about 2.5% on budget day. When they were fairly bullish, the market actually moved higher. So 63% was their long exposure in Feb 2021, that budget. The Nifty on that day moved nearly 5%, one of the biggest intraday moves that we saw on the index. Feb 22, again, net short, you had 1.5% sort of move itself. Feb 23, 18% net short again. A mild dip is what we saw. So now they're going extremely optimistic with a 77% long exposure. What happens today is something that we will see. But more importantly, it's the move before the budget and after the budget that matters, and not just on the budget day. And can you make a case for what happens before the budget and what happens after the budget? Turns out not, because I'm looking at multiple scenarios here. There was a decline of about 3% 1 month before the 2014 budget. 1 month after, the market moved 7% higher. 2017, there was a big rally. Maybe people thought there would be profit taking after that. There didn't be. In fact, there was 2.5% up move in the month after the budget. 2018, we saw a big lead up to the budget, and thereafter, there was a big decline of 6% as well. Last year, 2020, we had a 4.5% decline in the month before the budget, and thereafter as well, there was another 4% decline. So if history tells you something, it means that, you know, you can't draw parallels or patterns from what has happened in the past to now. So let's talk about now itself. What's the range?
Well, you know, Mangalam, if I look at the options data, the 24,500 call, well, that's been seeing some bit of addition. So yesterday as well, that did add a fair bit of open interest, and the premiums around 300 rupees odd. So that's tell you the call writers, they're expecting the upper level. That's around the 24,800 odd to hold out, because 300, you added to the strike of around 24,500 odd. So these are the levels I'm looking at. On the downside, the 20 DMA, that's the important mark to hold out. And on the upside, the recent high is what you're looking at. And on the Nifty Bank, that's going to be the big mover, right? Yesterday, it went down closer to around that 51,800 odd. And from there, it bounces. So that's the important mark that we're looking at. The 20 DMA is where it's flirting with. And if we can get past that, then we're on our way to fresh high. So for the current trading session, these are the key triggers. But that's about the F&O market, Mangalam. What about the cash market flows?
The cash market flows, there's a very interesting trend out here, because you know we've been talking about how the FIs have been selling the Indian markets in the past itself. April, there was a selling of close to 35,000 crores. May, there was a selling of 42,000 crores, matched dollar to dollar by the domestic institution investors. Importantly, post 4th June, the outcome of the election, the FIs slightly turned positive on India with a 2,000 crore purchase in the month of June. The DI has bought about 28,000 crores. Now in the month of July, they've shown us the money. So far in July, the FIs have gone ahead and bought 25,000 crores in the cash market, where the DI is actually giving some supply with a cut of almost 900 crores in this year itself. So this, you know, selling of nearly 75,000 crores in April and May, can that be undone? Now everyone's calling for the FIs to put more money in India. Will that be the case? If that was the case, then probably we'll see a bigger rally in the next few months.
Well, that's what the data is indicating, Mangalam, because, you know, from the emerging market basket, India has got bulk of the flows for the month of July itself. Now, just comparing the India inflows with a market like South Korea, which has been a darling of the FIs of late, and even the Taiwanese index. So, in fact, we've seen $3.5 billion of inflows in this month itself, and the other two, well, they pale in comparison. But for this year, actually, the Indian markets getting into July, it was more or less flattish with regard to the FI flows, so it was mildly negative. Now, because of this close to $3.8 billion of inflows that we've seen, that's turned around. And that's why now India is positive for the year itself. Korea as well, that's the one that's seen a bulk of the inflows, while the Taiwanese flows as well come up for you on the screen. So the short point is the FI flows are coming in there. They're holding one end up. And in addition to that, the mutual fund industry is sitting on liquidity of more than 1 lakh crore. So in case there is any kind of shocker, there's ample liquidity that's waiting by to get in. And in the last few months, they've raised their, their liquidity position as well by close to around 30,000 crores odd. But Mangalam, we're going to be looking at the budget. But quickly, let's wind up with the global setup. They ended overnight well in the green. And today's a big day in terms of the US market for earnings.
Yes, Nigel, you speak about regulations, politics, policies, earnings and all of that and stuff. Eventually, it is earnings that matter. So, we've spoken about all the liquidity, FNOQs, etc. The setup from the globe is very good. It's a good handover. 1.6% sort of gains coming in on the NASDAQ, 130 points on the Dow as well. Big day for earnings. You have General Motors, Coca-Cola reporting their numbers before the bell. Then you have Alphabet and Tesla reporting after the bell as well. And these are important barometers of the economy from all sides. You have the manufacturing, consumption and tech too. More importantly, for India as well, we have important earnings today. On the day of the budget, HUL reports its numbers. And alongside that, we have some other companies like United Spirits, etc. as well. So a lot on everyone's plate today.
Well, that's right, Mangalam. Just to sum up 2 quick points. What the markets want is that no tinkering with regard to the capital gains. And they also want to see more reformist measures rather than populist measures. But that's it from us. Let's go across to Sudarshan. He's joining us to tell us all the key stocks that'll be in the news today. Morning, Sudarshan.
Morning, Nigel. So as we prepare for the budget, there is a good news for Federal Bank. Company is all set to get the new CEO, and this is CNBC TV 18 news break is confirmed, which we reported in February. So RBI has approved appointment of KB Subramanian as MD and CEO for 3 years, and he was joint managing director of Kotak Mahindra Bank till 30th of April. Oberoi Realty, there was a positive management commentary. Company has held a con call after the market closed yesterday. Company says multiple launches are planned for festive season, looking to launch new products including mall, office and boutique hotel. Also, Pokhran Thane project launch is likely in festive season and 5 towers are being executed. Coforge's earnings were largely below estimates. Revenue has risen 2%. Margin has dropped 420 bips sequentially. Suzlon, it was a healthy set of earnings for Q1. Revenue has risen 50%. Margin was up 300 bips year-on-year. And wind turbine generator EBIT margin has risen 400 bips sequentially and 760 bips year-on-year. Jana Small Finance Bank, profit has risen 90%. NI has increased 32% year-on-year. Gross NPA has too seen a rise sequentially. Gross NPA has come in at 2.62% versus 2.11% QOQ. SAN DLM revenue was up 19%. Margin has fallen 150 bips year-on-year. MRPL, there was a sharp drop in operational numbers due to increased material costs. EBITDA has fallen 74%. Margin was down 660 bips sequentially. Zensar Technologies, all the verticals have reported growth. Dollar revenue was up 4.2% and constant currency revenue was up 4.3% sequentially. Allied Blenders reported improved earnings year-on-year. EBITDA has increased 18% and margin was up 80 bips year-on-year. GE Power Company has bagged order of rupees 348 crore from NTPC. Railtel bags order of rupees 187 crore from Ministry of Railways, and Gensol Engineering bags 160 megawatt solar projects worth rupees 600 crore in Gujarat. And last is Canfin Homes. SBI Life has bought 10 lakh shares via block deals at rupees 828 per share.
Oh, thank you, Sudarshan, for that. Order wins, infra push and no tinkering with the tax is what everyone's looking at from stocks perspective as well.